Gonna see if I can get a better mic. I'm really pushing it today. Go big. Testing. All right, let's find the music. We'll kill that. All right. Are we live? We still there? You hear me okay? Let's see. I can move that around. I can move this around. I can move that around. Let's see. I can't quite see what you see. Let's see. I might be logged in twice. Yeah, I think I'm logged in twice, so I can kill that one. All right. I can't see what you see, but I guess I have a giant webcam. Let me fix that. But good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, welcome to Chicago. I can see the lake. I can see the lake right there. You can't see it. But we got some skyscrapers. Good, nice. So I'm on the road doing important things. I can't tell you about it. I'd have to kill you. It's really hush hush. Keep it on the down low. Yeah, yes, yes, I'm living that exciting life. Anyways, good to see you, everybody. Thank you for your patience. Hey, you know what? The last two trips, I've had situations where YouTube would not allow me to stream, and I futzed and farted around with it for a while today, and finally got it. We finally got it. So, it's a beautiful day. Don't let it get away. So I'm super happy. No, I'm not at the Chicago Fed, but I'll be in St. Louis next week. I guess, is it exactly next week? 1 week from now? Yeah, 1 week from now, I'll be in St. Louis. Very, very cool. So, let me see if I can actually log in to traders.com. I don't know. I haven't logged in on this browser before. I think I need a different browser. I don't know what my login is. Wayne! Wrong browser. Let's see. I only got like 15 different Google accounts. Let's see if it'll get me in. Are you guys using the news feed? You're like, Wayne, I don't know where to find the news feed. Okay, well, yeah, that's fair. But this news feed, this news squawk is going to come soon to you. Oh, good. Goody. Please let me in. Please. Oh, what a good day. We're having such a great day. It only took me an hour to log in and get it to work. That's good. I'm happy. You guys happy? How about that ADP, eh? Yeah, ADP working great. Red hot. Smoking hot like fire. Jim says, "How is the Windy City?" When we landed and I was exiting the plane, the lead stewardess, sorry, flight attendant, high fived the pilot. She's like, "Did you land it?" And he's like, "Yeah, I did it." And she's like, "High five." And they're like, "Yeah, just a little windy." Yeah, so apparently it was windy. Yeah, and it was. I think I think we almost hit one one of the wings to the ground. What is my cam? Is the webcam, or is there just a delay? Do you guys see? the charts, or do you see traders.com? It's telling me that the webcam is still running. There's like a 15-minute lag or 10-minute lag or something. Yeah, okay. So, once again, I don't know what's so glitchy, but okay, so we're good. So I'll ignore what I see. Yeah, good. Das ist gut. Okay, Bitcoin's right. The, the young kids gold. Yeah. So gold is up 2,800, on Bitcoin. Same. Kind of the same asset, huh? Looks like there's about a 20-second lag in how you're responding, but there looks like a 15-minute lag or something on the video that I'm being displayed. So it's kind of weird. Anyways, 10-year T note yields about the same. Oil still struggling down there in the 60s, and S&P 500 above 58. Are you kidding me? Look at that. We got a risk on. Okay, risk on. Now some of the companies. Who's down today? There's is it Eli Lilly down 10%? There's, I think, another company too. I can't remember. Someone else is down like 7%. So that might keep the markets down, or at least less up. Sorry, phone's popping. Yeah, sorry, my phone is popping. That's all. Looks like we got TRADARS correlation alerts going out, stuff like that. So anyways, lots of things happening there. Notice how few things we have bearishness on, huh? A week ago, this was all red, and now, wow, a lot of things have gone neutral. Maybe that risk on is coming in. And remember, this is the week that we thought maybe risk on shows up. And isn't it interesting that we log in and the first thing that we see is OMG, we have some risk on. In the middle of the week, in the week that we thought maybe, just maybe, we'd go from risk off to risk on. So I don't know how prolific that is, but let's take a look. And well, long term is still risk off. We were risk off here on the weekly bias. So it looks like this is the same, but the middle two have gone from risk off to neutral. Remember, it takes a little more time to switch this one from risk off to risk on, and then it takes less time to switch this from risk off to risk on. And so it looks like it just might be happening. Oh my god. So let's take a look. I want to show you the weekly, okay? And week over week, guess what? Bulls are in control of the options market. Over the last week, there's been more calls than puts. That's risk on. Yields on the 10-year are up, but not by much. Well, we already know they skyrocketed. Look, 12%. But over the last week, they haven't done much. We stabilized around 4.25, which is kind of where maybe the future, Fed funds neutral rate is. 2-year, okay, up a little bit, so that's bearish. Oops, didn't mean to do that. Well, let's keep going with it. Yen is flat, no big deal. Dollar is flat, no big deal. S&P 500 is flat, no big deal. Gold is smoking hot like fire. Well, I mark that as bad. Okay. And volatility is up a little bit. I mean, look at month over month is up 14%. Okay, that's bad. But really, week over week, look, it's been flat the last 7 days. A little bit of capitulation. But remember, this is the week we're expecting essentially a trough in risk off. Ooh, that rhymed. I can't help it. I can't. Inherently a rapper by nature. I just can't help it. Yeah. So, anyways, interesting. It kind of smells like a trough, doesn't it? Interesting. Yeah. Interesting. Very cool. Right on. So let's take a look at the scatter plot, see what's working, see what's not. Oh, look at that. Interesting. All right. I thought it wasn't zoomed in much. There we go. Hello, hello, hello. But that doesn't fit. The strange thing about this laptop is the resolution is off ever so slightly. Like it's not 1080p, it's like 1060p or something. And I don't know why. I keep checking it and I keep checking the text size and the zoom size and everything, and it just doesn't fit quite right. Interesting. So, for you guys that love to trade and you love to travel, I'm sitting here in my hotel room with three screens, just right here, just right here. And I only have one thing plugged in. I have my laptop plugged into the wall because we're eating a lot of juice. But actually, I don't need to. I could probably go an hour on triple screen, not even plugged in. Isn't that cool? So I have a screen here. What you see is eye level for me. And then the chat is down on my other screen. And then the streaming software is on my third screen. So I can see the streaming software. Oh, so now I can actually see that I'm up in the top right corner. There's my webcam. Okay, that's cool. So nifty, huh? So if you're traveling with the family, setups like this is very helpful. I've traveled with my family a lot and traded. So there was like I remember one time I set up an office inside the master bedroom closet and moved a desk in there, and I had my laptop, I had my external screens, and the wife and kids, and I think we were traveling with another group, so they all met at the front gates of Disney when Disney opened. And what was I doing? Oh, traded the market open, and I'm like, I'll meet you at the castle at 10 a.m. I got to trade the open. Um, and so having like a portable setup like this is super cool. All right, so taking a look at what's working right now. Yeah, oil's dropped to a -1, but it's up today. Okay. Yeah, indeed, Denise. Denise, when they were just two kids out at MIT, I think it was two or three people. They were still students at MIT, and they started to develop a prototype for the screens that come out on the left and the right screen, and that's I was probably their first customer. Yeah, so I gave them a little support, a little love. I ordered screens from another company in China, and it was supposed to be delivered when we did our Council of Investment Advisors in Nashville. Yeah. It was supposed to be delivered before then, and I was going to give them to one of the CIA members. My plan was I was going to use it the whole, meeting and then say, by the way, let, you win and take it home. And it still hasn't arrived. I still don't have it. So it's been over a year and it still hasn't arrived. So thank you, Mobile Pixels, for actually doing it right. Yeah. All right. So, anyways, platinum down. That's odd. Copper up. So let's isolate here. Let's take a look at like commodities, for example. Do we see correlation? Oil's up, platinum's down, silver's down, gold is up, copper's flat. You're like, no, nothing really going on there. But remember, maybe this is a trough. I don't know. So, Bitcoin not doing much today. Yeah. Stock indices, how are we doing? Well, every stock indice at traders.com is given a positive score between 2 and 10. The one with the 10 is way up. Okay. Main stock market is just open, so it hasn't popped yet. Everything else is just kind of meh. Okay, let's look at our majors. And pound dollar has a score of -2, so we expect it to be down. And it is down today. Looks very dramatic. I can't see what that says. Can you? There we go. And it's down 1/3 of 1%. Yeah, so you're like, okay, it's not a big deal. So the dollar isn't moving yet. Okay? Yeah. Calendar isn't moving yet. Take a look at the money market. Okay? Money market, the hot money, the 2-year is flattening out, which is okay. It's okay. Nothing, it's not any worse. Something, oh, I want to catch that. It doesn't matter. I'm just trying. Yeah, see, I can sit here all day until I go mad. But you're already mad. All right, I'm already mad. All right, so zippity doo dah. How about the market? The options market is going risk on again. Okay, going risk on. Very cool, right? A little bit of risk on. It's never really gone risk off. We've had it's the absolute number has been generally risk on, but fading, like bullish, fade to neutral, bullish, fade to neutral. Now we're doing another cycle. It's very rarely actually gone bearish. Now, in our in our various gauges, you might see like on a daily view, it's bearish because it's rising back toward the red zone. Or even weekly, it's been generally moving back to the red zone. So they would have negative scores, right? The ratio would be toward um, the puts. But in absolute term, meaning if you look out on the monthly gauge, well, yeah, we might be losing bulls, but it's still bullish. And it's nice to be able to take a look at that and reaffirm that you got it right mentally, right? You got it right. Okay. So we had a smoking hot ADP. How did GDP come out? What's the number on GDP? Yeah. Well, while you were farting around, I was doing work here in Chicago, and and so, anyways, yeah. So we got to update, right? We got to update, and yeah, interesting, right? 2.8. We can see how it fits okay, doesn't it? Now the thing is, 2.8 is a red hot GDP. Excuse me. Okay, that's a red hot, smoking hot, ridiculous GDP. All right. And you might think it's good news. I still think it shows that we have too much monopoly money in the economy. The United States is not supposed to be growing anywhere near to 3%. We should be growing at 1.8. So there's still stimulus. I could argue, and I don't want to argue too much because maybe they'll take my advice, but I could argue that there's absolutely no need for the Fed to cut interest rates. In fact, we're at neutral. We may not even be restrictive. We're at full employment. We're growing at 2.8%. It's crazy. Maybe the Fed should raise interest rates. No, see, whoa, shh. Yeah, that's crazy talk. I know it's crazy talk. But if the US government is not going to pay down its debt, there's another way to do it. You destroy it. Okay. You can destroy value. So if we have $5 trillion, let's just focus on the federal money. If the if the federal government, not the Fed, if the federal government borrowed $5 trillion and gave it away for free during COVID, then the true cure to inflation is to pay the $5 trillion in debt back. The federal government should pay its credit card bill just for what it did during COVID. It was already bad before COVID. So they added another 5 trillion, right? All right. That would be devastating, wouldn't it, to the economy? Well, let's talk about that for a second. Have we fixed inflation? Well, inflation's rising somewhere between 2 and 3%. And you're like, well, that's pretty much normal, right? Okay, that's the rate of inflation. But if prices are 20 and 30% higher than they used to be 6 years ago, 10 years ago, then we haven't fixed anything. It's just not getting worse as bad as it was getting worse before. But if everything is still 20 and 30% more expensive, then we haven't fixed anything. So, how do you get back to like 2015 prices? Well, you could pay down the debt and slow the economy to a crawl, but that would lower it. But that would be a controlled burn. That would be like the forestry department purposely setting little tiny fires in the forest and controlling them so that there isn't one giant, massive, out of control fire. That's called management. So the federal government could do this, purposely slow the economy down and get prices back down by lowering demand and increasing supply. Pretty simple. Or the other way to do it, if you want to cure, I mean, permanently cure the negative consequence of the government policy during COVID, you could destroy the 5 trillion in value. You could just destroy it, which means the value of your house can drop by 50%. The value of your retirement account could drop by 50% because we have a debt crisis or something, right? We have a debt crisis, we have a war, we have something. Foreigners don't want to lend the United States money. I don't know, whatever. I think most of those things are pie in the sky things, but there are risks. I mean, the worst risk is the one that you don't think is going to happen, and then it happens. Excuse me, sorry. So, something could come along, right? And all of a sudden, you have a giant forest fire that's completely out of control. And unemployment goes back to 10%. The value of your house drops, the value of your retirement account drops, the value of all assets drop. But the thing is, do you destroy 5 trillion or 10 trillion? Well, if nobody's in control, how can you manage that? But that would get prices back down to 2015 prices. But we haven't fixed inflation, have we? And when I look at this 3.0 GDP, I'm like, what the heck are you talking about? 3.0? Okay? That's nuts. Okay? Sorry. Man, I don't even have ghee in my coffee. All right. So, anyways, can you spot COVID? Okay. Here's a forest fire that we call COVID, complete out of control, end of the world, zombie apocalypse. Okay. And then, ciao, overstimulus. Yeah. Now, Trader Ward points out the Fed is always in control. Ha 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 ha. Well, I'm not actually talking about the Fed. I'm only talking about the federal government. The Fed also added 5 trillion. So to go from here, you have to shut the entire economy down, and then go to up here, it will cost you $10 trillion. Now, I don't have a problem with the Fed, and I think a lot of YouTube gurus, and I'm not saying you or other people you may listen to, but I think other YouTube gurus confuse Fed and stimulus. Now, the federal government added stimulus. What is stimulus? Does anyone want to define stimulus? Let me go get another coffee. I made two at a time. Um, I like cold coffee. But please answer. How would you define stimulus? All right, so you're either not answering or there's a lag again. Boo. All right, so let me make the clear distinction between the two. Well, Revenge Trader says helicopter money. Yeah, but it's actual money. Okay? Actual money. Okay? I think my family got something like $10,000. I don't actually know. I don't, but it was strange. The first one we got a check. The second one we got a direct deposit. There was a third one for some reason. It was each. It was really really strange. But it was money. They just gave you money. So Revenge Trader says money. The key word there is money. Okay. How is that different from the Fed? Since we're not talking about GDP, maybe it's better to have an open conversation if I can have that. Ah, there we go. Maybe that's better. Let's have a talk. Okay. All right. So let's go back into it. What does the Fed do? The Fed doesn't print money. Okay. It's very, right? The Treasury manages that. All right. Cool. Do you mind if I just relax? All right. Well, I guess then you lose the light. Nah, weird, right? Anyways, the Fed issues credit. Nobody in the United States got Fed money. Now, my family got government money. We got stimulus checks, but the Fed issues credit, which is different, right? And credit means if you're going to get it, you must be credit worthy. And do you get credit to go buy groceries? No. You get credit. So the credit goes from the Fed to the banks, and then the banks take the credit and then they lend the credit to customers and clients that are credit worthy and have a investment project that is credit worthy. Do you want to buy an apartment building? Do you want to buy a skyscraper? Do you want to build a factory? Do you want to buy some inventory? Okay? And the credit is issued. And the interesting thing about credit is you can withdraw the credit. So the Fed has already withdrawn $2 trillion of its Fed credit. All right, thank you, Fed, right? Thank you. I mean, I think the Fed's doing fine. I mean, they added it, it was needed. Now they've withdrawn it, it's great. Okay, cool. Does the Fed make mistakes? Oh, yeah. But what we're talking about is inflation. And right now, inflation was created by the federal government. Yeah. And so, what has the federal government actually done? Did they raise interest rates to slow the economy down and kill inflation? No, the federal government didn't do that. So, inflation is down. Does that have anything to do with the federal government? No. So, what has the federal government done? Nothing. Nothing. Not even a little bit. I think it's even taboo to talk about fixing inflation. But I thought that was their number one goal. Yeah, well, they're not doing it. Okay. So, like, for example, let's say you're a political party in the United States and you have power, you're in control, and you say your two biggest agendas is to bring down inflation, but also support green energy. So, what would you do? Well, you could give rebates for those that buy Teslas and other electric vehicles. Okay. But if you're going to sell more Teslas and electric vehicles, and this is part of your business plan as a government, then you'd go out and secure long term mining deals for cobalt and lithium and copper. But they haven't done that. They haven't secured long term deals, so now that increase in demand will actually make prices go up, so that's inflationary. Oh, so then you might as well say, well, then if we want to lower prices and support green energy, then we should allow China to bring Chinese electric vehicles into the United States and you can drive a BYD. No, they don't allow that. But those cars are good cars and they're cheaper. They're half the price of a Tesla. So you would promote electric vehicles and drop the price by 30, 40, 50%. That would be disinflationary. Nah, but they're not doing that. Well, what about windmills and solar panels? If you brought in Chinese solar panel costs would drop by 30, 40, 50%. And now you're generating power and adding it to the grid and lowering the cost of this technology. Nope, they're not doing that either. Then what are they doing? Right? They're saying one thing and they're doing another thing. They're like, we this is our agenda, but we're driving up prices. I'm like, I don't get it. It's weird. And so, like, they didn't drop inflation. So who dropped inflation? The Fed? I don't think so. I don't even think the Fed dropped inflation. I think entrepreneurs dropped inflation. Yeah. So now we're like, we feel like everything's good now. We have this irrational exuberance, but prices are not down. They're just going up more slowly. Okay. So that's not fixed, is it? And what is, we got the supply chain, but also now the other thing that has brought down inflation around the world, because I study inflation in Australia, New Zealand, Canada, the United States, the UK, Europe. Okay, we actually read these reports, and the number one contributor to disinflation is low oil and gasoline prices. Well, hell's bells. Okay, that has come down again, but if it goes up, then we're just as vulnerable as we were before. So maybe a drill, baby drill, would keep inflation down. Okay, but that's only half the problem. Okay, yeah. So I don't like tariffs, but Trump said one thing that caught my attention. He said he would tariff, as we all know, he's likely to tariff, but he said he'd take some of the money and pay down the deficit with it. Oh, I haven't heard that one before. So that's cool. I haven't heard a politician say that one. The lighting's getting worse here. You can't even see the background anymore. Let me know. So, anyways, so good convo, good conversation. Just we're having conversation and coffee around the charts. But make sure you understand the difference between credit and stimulus, and understand the difference between inflation, disinflation, and deflation. Okay, we have disinflation, but prices are still 25% higher. So we haven't fixed inflation. Michael's like, mega. Yeah, well, no, but there, look, like, I'm just a Canadian boy from Saskatchewan, right? So I'm analyzing it through the lens of economics and monetary policy and even intellect. I took a great class on international political economics. Very interesting. I mean, people get degrees in this stuff now. International political economics. Okay. Lucas says, what do you think of his idea of tax off if you buy it domestic? Well, first of all, it was you can write off the interest on your lease. Okay. That's okay. Now, I like stuff like that for a couple of reasons. Um, if you don't pay your taxes, screw you. And I'm a big proponent of that. Like, I don't know. People are going to get upset by this, but I wouldn't have a problem saying if you don't pay your taxes, you don't get to vote. If you don't, I mean, I'm not including retirees, but if you're a working age person and you purposely are not working and you're not contributing to the progress of society, I don't think you should get to vote who's in charge, right? So, anyways, back to this, like if you're going to write off the interest expense on your car lease, you have to be paying your taxes. So I like stuff like that. The other thing, Lucas, is apparently you used to be able to do that. Does it make that much of a difference? Well, maybe. I think the problem is that people have to lease their cars now because a crappy car is 80 grand. 50, I don't know if that's true. 50, 60 grand. 60 grand for a crappy car. Yeah, I went for a ride to the airport in a Honda CRV. and I thought I was going to die. Oh my God. I'm like, oh my God, this is the worst car I've ever been in my entire life. I thought it was going to blow up on the freeway because we're doing 62 miles an hour. Um, it's funny, but those, but when a car like that is 30, 40, 50, 60 grand, oh my God, yeah. So people are going to lease. And leasing is just shadow banking because the car company is paid for the car. Now they're going to sell you to the car, but you can't afford the car. So now they'll give you the money to then buy it back from them. And so now they're funding their own sales through this lease program. So my what I guess what I'm getting to, Lucas, is like you shouldn't borrow or land, for cars and stuff like that. But cars are so expensive now. Even cheap cars are expensive, which is ironic. Um, that everyone's going to need to lease or borrow, which is a terrible investment idea. And then what? Well, if you're going to pay high interest on it, at least you can write that off in your taxes. So therefore, great. Okay. Oh, well, that I don't know about. Now, if you're saying a nurse can deduct the purchase of a car, I don't know anything about that. I don't know that proposal of like nurses, teachers, firefighters. But then, you know, what about me, Lucas? I protect people's uh, retirement money so that they have safety of being able to afford their rent and afford their medicine and live a stable and stress-free life. And when they die, their life savings is available for future generations. Should I get a tax write-off? It's good. I'm like the nurse, fireman, and policeman for people. Right? So do I get to write off right my Bentley? Do I get to write off my Bentley? I'm a good guy. So, anyways, who gets to choose, right? So, an elementary school art teacher? What about a Harvard professor of economics? Do they both, So, anyways, you see how that can get complicated. But yeah, I don't know. I don't know. But if I right, right. Oh, Lucas, farmers are not cool though. But wait, you can write off your trucks and your equipment and stuff, right? So I guess because a farmer is a business man or woman, but farmers are a business, right? So, um, what a lot of rich people do is buy land and get some horses, get some chickens just because they're cool. You hire a couple of people to take care of the place, but you incorporate it as a business, right? Lucas, do you know the story of Charles Schwab? Have I told you this one? He liked to hunt ducks, so he lived in San Francisco, and once or twice a year he'd go into the Central Valley to hunt ducks. Do you know this story? Maybe. So he does some research because he's a smart guy. He's a billionaire. So Charles Schwab says, well, he goes to the fancy hunting club. Costs him 10,000 a year to be a member. I don't know, maybe 100,000 a year. Probably not 100,000. It costs him 20 grand a year, let's say, to be a member of a duck club where you go out shooting. And he's like, well, where do they get to go hunt? Well, there's there's wetlands. And so they go out to the wetlands, and as the ducks are migrating, they land in the wetlands. and that's a great place to hunt. So he's like, huh, this is interesting. And he's looking at the wetlands, and he asks the guide, he's like, hey, so what's going on here? And they're like, well, it's wetlands and we're allowed to hunt here, but they grow rice. By the way, the rice goes to Egypt, and Egypt buys our F-15s. But I digress. So, anyways, so California grows a lot of rice, and it's out in the Central Valley in really this man-made wetland. And then because it's man-made, the farmers are growing rice, but the ducks don't care, right? So the ducks come in, and so during duck season, the rice farmers allow the hunters to come in, right? So, anyways, so Charles Schwab says, well, hell's bells, right? So he calls all his people, he's like, research this. Turns out because we give the rice to Egypt to be our ally if there's ever problems in other places in the Middle East, plus the canal. So we give them all this rice, and then we give them the opportunity to buy our F-15. So that's great. So the rice is one of the most heavily um, subsidized crops by the government. So Charles Schwab looks at all the numbers and sees, oh my God, it's free money. The government is overpaying for rice because they're not even intending it for American markets. They're just giving it as a political tool. And so it's way over subsidized. The prices are way higher than international prices. You can just buy rice. So anyway, so Charles Schwab buys up millions of acres of rice farms in the Central Valley, right? And he makes millions and 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 millions of dollars of profit every year on government subsidies. And now he doesn't have to pay the 20 grand to the hunting club. He can just go hunt on his own land, on his own rice paddies. So once or twice a year, he goes out there, shoots some ducks, but he probably makes $30 million a year profit. And he only visits the property once or twice a year. He just owns it. And everybody else does everything. Everybody else does the work. And it's all on US tax dollars, huh? Like, dude, you gotta know. Don't hate the player, hate the game. It just makes sense. Why would you waste 20 grand being a member of a private hunting club when you can just own everything and make money? Yeah. Yeah. Ted Turner doesn't even pay a mortgage or a rent. Of course, he owns, but he doesn't have an expense like that. He doesn't even pay for food. The guy's got billions of dollars, right? He's got $100 billion in the bank, and he doesn't even have to pay for food. It's all a tax write off. Yeah, smart. You got to know money. You got to know money. So, so this GDP is nuts. Okay, GDP is nuts, and as I've shown before, we're in this period of gold going from a negative seasonality to relatively less negative. So, right, a negative times a negative is a positive. So, less negative is positive. Okay, pretty cool, right? Now, it's not a big number overall because inflation has gone down. And when CPI is falling, it's less reason to own gold. You see? But it's still not a bad investment. And we know that we went bullish on gold back in July 22nd. Yeah. By the way, just out of curiosity, did anybody know or hear that story about Charles Schwab, the dude, not the company, of course, the dude? Did you know that one? Let me know in the comments. Okay, we did tick up one on gold. No, we didn't. It says here we did, but oh, it's interesting. No, it didn't. The change is zero. Interesting. I think it's not adding one of these things. I'll have to take a look. Yeah, okay, yeah, you knew that one. All right, I figured. Emmanuel didn't know it. All right. Yeah, it's interesting how, yeah, well, the story is 25 years old, right? Yeah. Like, for example, one of the opportunities that was presented to me is if I invest, or it's even lending, but I guess invest money into a government program. The money goes to native reservations around the United States that need money for things like drilling oil or building schools. And it's something like, if I can remember, if I lend, if I contribute, let's say, uh, $60,000, let's say, or 600,000 or 6 million, whatever the number is, I get $100,000 tax credit. So let's say you already owe taxes, and they're like, Wayne, you owe $100,000 this year. Instead of giving the government 100,000, you can put 60,000 into this program, and you're free and clear. You keep the other 40,000 for yourself. Would anybody like to be in a program like that? It's just right from the government too, just like that. So imagine you owe 10 million because you sold an apartment building and you own 10 million in taxes. Well, now you just pay 6 million and keep the 4 million difference. You can do this now. It's like, but you need to know the game. You got to have access. You got to have power. You got to have privilege. Good to know. See, the government wants to drill oil on native land. Natives want to drill oil on native land, but nobody ain't got no money. So the government's like, well, for the high net worth individuals, we'll have them lend us the money and we'll just pay 40% interest because it doesn't matter. It's just a tax write off. So they're like, whatever, 40%, that seems reasonable. Someone's going to invest if you give them 40%. And instant. And the thing is, would have been in a situation where I paid 10 million today. I owe it. Or I pay six and I'm done. I'm like, dude, right? Because it's such a good deal. You're like, okay, I like 6 million versus 10 million, right? Cool. But you got to know the game, right? You got to be in the game, I suppose. But it's interesting how money works, isn't it? Mhm. All right, all right. Cross pair, euro going up, just shows how weak cat is. Beast, this is disconcerting. Yeah, that definitely looks down. That's a sell here. No doubt about it. The problem I have with it is I don't really want to do it. But that's an easy sell, right? Oh my God. Easy sell. What else? Swissy yen. It's trying. It's there's a battle going on. It's still sellable though, ladies and germs. Kiwi dollar, pass. Pound CAD, pass. Euro ZAR, pass. Although, remember, was it yesterday or the day before? I can't remember. Um, really interested in selling USD Rand and USD Peso. Cross pairs. See, I'm not interested in cross pairs. I'm interested in trending. The difference is 90% of trends are either buying and selling the dollar or buying and selling the yen. Now you can throw in buying or selling Swiss franc, and it's probably 99%. So when you don't have a trend in the yen, the Swissy, and the dollar, and usually they're all the same, weak Swissy, weak yen, weak dollar, weak Swissy, weak or strong Swissy, strong yen, strong dollar. That's 99% of the time, right? Now, every once in a while, there's no underlying intrinsic trend. This is why we start with the gauges. If there's no underlying intrinsic trend, you do cross pairs. But I want the trends to show up. And so when I see a cross pair like Aussie Kiwi, I'm like, meh. Okay. Right? It's like a dog chasing its tail. Sorry, Australia. Sorry, New Zealand. No disrespect. Pound yen, yeah, choppy, choppy, chop, 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 chippity, chop, chop, salt, chop. Wow, we got 4 pages of patterns right now. I'm going to skip to page 3. There's 4 pages of patterns, y'all. You all must be busy, huh? Yeah. Okay, a bust to move Euro Aussie. There's a cross pair, but if it dips back to 163 and a half, that could be a bid. Okay, big move down, up, 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 and then resell around here. Remember, up arrow doesn't mean up. It means be ready for the up and then be ready for the next down. There's nothing up about this. It's just saying Aussie dollar experienced 4 consecutive bearish candles, possible bullish price movement to follow. So how do you trade that? It's down. It's bearish. You sell high, bro. So probably in here somewhere, huh? Yeah. Anyways, so bust out a fib. Well, Michael, they're tough to predict. Cross pairs are tough to predict because you're not actually observing actual investment. So, like if you're doing like Aussie CAD, that's a cross pair. How much business does Australia do with Canada relative to all the other business in the world that it does? How does it compare with the United States? How does it compare with China? Like zippity doo dah. So nobody's trading Aussie CAD. Very few Canadian dollars are moving towards Australia or away from. So why do we have an Aussie CAD? And why does it move? Okay. It's called relative strength. And so to show relative strength, you need to go to here. Do, 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 do. Think I have it on this. Oh, I might not have it. Oh, here it is. No, I'm not an ECN. Not. I have a VAR account. All right. So this is the Aussie dollar versus all currencies. Okay. Let's do it longer time frame. This is the euro versus all currencies. This is the CAD versus all currencies. This is the yen versus all currencies. Okay? This is the dollar versus all currencies. This is the Swiss franc versus all currencies. This is the Kiwi versus all currencies. And this is the pound versus all currencies. We call them, each one of those is an index. Combined, they're indices. So, pound versus everything. Or, in our example, Aussie versus everything, and CAD versus everything. Aussie CAD is going up because Aussie just recently has been strong relative to everything. And Canadian dollar is weak right now relative to anything, but it has nothing to do with money going from Canada to Australia or vice versa. So the Canadian dollar versus Aussie dollar is going up, but not because money is flowing from Canada to Australia. They're just relatively different. So you're not trading true cash flow. Okay? And of course, I don't have Aussie CAD here. Let's remedy that. Aussie CAD. Okay. Look, it's going up. How did I know that? Because I'm a freaking genius. No, I looked at the indices. So look, nobody is trading this. So it's simply relative strength. Okay. Now, Michael is then like, they're tough to predict. Why is that? Well, because you're not actually trading cash flow. Something in the world can change the value of the Aussie dollar versus everything, or CAD versus everything. And you won't really see it on your chart. It wouldn't necessarily be technical. Although you can see the technical analysis, it's crazy accurate and beautiful. But it isn't necessarily, we're indirectly observing. You're not looking at the black hole, you're looking at light bending. So you're not really looking at Aussie CAD cash flow. We're doing the calculations to get to the derived value or flow of Aussie versus CAD. You see, it's not real. It's synthetic. And that's why it's tough to predict. Yeah, but see, right? And that is the important part of it where I look at the world in a way that there's three reserve currencies. Okay? We have a global reserve currency. That's the US dollar. We have an Asian reserve currency. That's the yen. We have a European reserve currency, and that's the Swiss franc. And macroeconomics determines the demand, okay, or the supply. Demand is buying, the supply is selling of those three currencies. The macro is one force, and the one force tends to move those three currencies the same way. So when things are good, the market gobbles up all the yen, all the dollar, all the Swiss franc, and then what do they do with it? They go into the foreign exchange market and they buy something else. So you buy a bunch of Swissy, you buy a bunch of dollar, you buy a bunch of yen, and then you convert all of it into the Aussie dollar. What happens? Aussie dollar goes up, but now in the interbanking system, supply of dollar, supply of yen, and supply of Swissy has gone up as well. Bear in mind, most people are leveraged too. So it's leveraged hot money. So there's a lot of yen available. There's a lot of dollar available. There's a lot of Swissy. Everybody is selling it to buy something else. So dollar is skyrocketed, or Aussie dollar is skyrocketed, and all those funding pairs, all those reserve currencies are flooded into the market and are falling. So you sell when times are good, you borrow a reserve currency, and then you sell it in exchange for something else with a foreigner. The foreign exchange. It's not just what it is. The foreign exchange isn't a place, it's a process. Right, Lucas. Yes. And that's when you do your series 32, series 34. I think it's series 34. Oh, you got to do stuff like that. And I hate that stuff. But yeah. You all right? Are we having a good time? Okay. Well, Michael, what I'm saying is the way I approach Swissy, yen, and dollar is exactly the same. The impact of macroeconomics. So it's the macro before the currency. But yeah, I don't like this is why I rarely buy USD yen. Rarely buy Swissy yen. Okay. I rarely trade USD Swissy unless there's a greater force acted upon it. Yes, Newton's laws of trading, huh? A currency in motion tends to stay in motion. That's called a trend. Okay? Unless a greater force is acted upon it. That's your macro. So that it'll either make it trend or it'll make it stop trending. So my number one thing is macroeconomics. And I'm willing to spend a couple of $100,000 learning more about macroeconomics. And I did. To me, it's the number one thing. After that, it's just a trade. See, trading's difficult if you have no strategy. The only way and then everyone gets to the same conclusion, the only way you can trade without a strategy, meaning fundamentals, is short term scalping. And that's why you see retail traders, they work all the way down to the 1 minute and the 5 minute chart. And you see these gurus making, $1,000 in 10 minutes because you're big leverage with small wins. Without strategy, it's unpredictable, right? And so what'll happen is you will get to the point where when you're focused only on small time frames, you'll never get any big winners. So therefore, the only way to make any real money is leverage, bigger lot sizes on pissy little trades. And we all know that it looks good on YouTube, but it ends in bankruptcy, possibly alcoholism and depression and divorce. Hey, dude, you think I'm joking? I've met a lot of traders in my life. Sometimes it ends poorly. Yeah, Forex trading has led to divorces. Absolutely. I know it for a fact, right? So I start on the other side and I say, all right, what are we going to do the next 12 months? And from that, I know whether I should be buying dollar or selling dollar, right? And then from there, I can look at seasonality and say, okay, when is a good time to act upon my strategy? When should I land the helicopters? Which doors should I kick down? Where are the bad guys? And that's all tactics. But with a good strategy, you know your intent, and then you do research. How do I carry this out? When do I carry this out? On what do I carry this strategy out? Okay. And you approach trading from a much different angle than MACD cross, so I guess I got to go buy now. Okay. Okay. And so, therefore, if you have a strategy, you can let your winners run. But you wouldn't be able to let your winners run if you didn't have a strategy. And you wouldn't have a strategy if you can't formulate some vision for the future. And you wouldn't be able to do that if you have no fundamental research behind what you do. And when you meet with professionals, you rarely talk about a MACD. I don't think I've ever talked about a MACD with a professional. But we always talk fundamentals. Like, for example, what's the Trump trade? Oh, well, tariffs will raise inflation. Oh, dollar strong. Oh, that'd be interesting. What about the drill baby drill thing? Okay. What's the trade? Oil prices down? Does that offset? Your Louis Vuitton bag goes up 10%, but filling the Ford F-150 is $18 cheaper than it used to be. Are you okay with that? So you have to start threading the needle a little bit, thinking ahead. What's the trade? Where's the trade? This is what a professional talks about with another professional. And of course, they probably don't actually tell the truth. They bullshit each other because they don't want to give away their alpha. But you sit down and you're like, what's the trade? What do you think about next year? What do you think the neutral rate is? What do you think the rate of change is at the Fed is? When are they going to pause, cut, pause, cut, pause, cut? January? Okay. What do you think about Canada? What do you think about Australia? What do you think about New Zealand? Do you know the difference between the UK and Europe? Well, let's think about it. In the United Kingdom, they have a composite PMI of about 51.2. I believe the service sector is about a 52, and I think their manufacturing is about a 51. And so it averages somewhere in between. But when you look at Europe, services are doing okay. They're at a 2 month high. They're at 50.8. But if you look at the manufacturing sector, it is a total disaster in Europe, down at like 47.3. And the worst of it is Germany and France, the two largest economies in Europe, are choking on their own blood. Do you think a professional should be able to do that from the top of their head because they have actually done the research? How many people think that that's actually important? And and if you think it's dumb, like nobody cares, oh that's hocus pocus, let me know. Let me know. Important or crapola? What do you think? Should a professional be able to just do that on demand without a teleprompter? What do you guys think? Imagine you're sitting with a billionaire client, which is actually funny. I'm having breakfast tomorrow morning with someone that was just allocated $6 billion. So imagine you're sitting down with somebody who has billions of dollars to invest, and they're like, "Oh, well, what do you think about Canada? What do you think about oil prices? What do you think about fracking? What do you think about the election? How do you think that's going to impact the economy? What about global demand?" Real questions. But the thing is, why are they asking? Because they're deploying capital. This is what they care about. Your MACD on a 15-minute chart, that shouldn't be the thing that makes or breaks your income. Oh, you're going to live in a cardboard box this year because MACD betrayed you. Yeah. So, anyways, see, now if you have the data, you can, right? Think of how it all works. You gather intelligence and you formulate a strategy. Once you have a strategy, then it's tactics. Do you understand this is the way you plan a business? I, for example, let's say I'm a politician and I say, I want to lower inflation and I want to save the environment. So I am going to go around the world as President of the United States and personally negotiate 50-year contracts with producers of lithium and copper. And I'm going to screw China out of that market. Screw you, China. This is about America. America first. This is our lithium. Sure, it's in Ecuador. I don't care. This is our lithium. You can't have it, China. This is for us. Okay? And you're like, oh, that would be part of a strategy, right? But instead, what we did is we let China do that. So now all that lithium in Ecuador belongs to China for the next 50 years because we didn't do anything. Okay? So if you're not going to do that, what's the next thing? Let China flood the United States with BYD electric vehicles, solar panels, wind turbines, and drop the cost of green energy by 50%. Well, that would be a strategy too, right? Yeah. So I don't know. Anyways, what we do as traders is the same as anything else. You see? You have to gather intelligence and formulate a strategy. What is the economy going to do next year? I don't know. You're not going to be a very good investor. You might be able to trade, but I don't think you're going to get big. I mean, some traders get big, but but I mean, I guess you could be um, what do you call those trend traders? Are these trend traders? The big I guess they're just trend traders, right? The turtle type traders. You're like, I don't know. Like for example, let's just see if this exists. Okay. You on May of this year, you would have bought Aussie Cat, and you're done. And you're just going to own this forever. Okay. Maybe that's how you do. Uh, let's do more like Aussie Swissy. Okay. Let's do this one. You're a trend trader. Now, you would have actually shorted this years ago and then got knocked out recently, but you'd be reshorting, I think. Okay, so a month ago you would have sold here and you're done. And now you let it run. But you also see how different this is from what 95% of retail traders are doing. Retail traders are doing this. How can you buy, sell, buy, sell, buy, sell, buy, sell when you could have just a month ago sold it and you're still short and you're probably going to be short a year? Like selling this move right here, you would have been short from July 2022, and you would have 2 years later, you would have been short 2 years. So you're either a macro trend trader or just a big trend trader, trading daily and weekly charts and staying in the trades for long periods of time, which is similar to a macro, but without the fundamentals behind it. You're catching a macro trend, but you're not really sure why. But a trend trader doesn't even care. A macro trader cares because they can try to predict ahead of time. But I think smaller time traders, if you're skippy scalping while you're waiting for setups, that's different. Um, but I really want for you to be able to gather intelligence and formulate a strategy. I built an entire resource for you to do it. Scalping's cool though too, but you should be able to do all of it. And by the way, for those who are listening, I often get emails, maybe once a week, where people say, "I I have access to the scalping tool, but I can't. But I don't got the volatility radar." Yeah, you have to click there. They miss the nav. So if you're watching, Okay. Cool. Cool, cool, cool. I hope you guys are using this volatility radar. I am starting to love it. So you're a bull on pound Swissy, right? Look at the buy zone identified for you hours and hours and hours and hours in advance. And the probability is it will not fall further. So you could go long here, put your stop down here, and you are probably not going to get knocked out. And you will probably find yourself up here later today, but most likely tomorrow. Oh my gosh, guys, look how amazing that is. It shows you probable entry. It shows you realistic stops based on what actually happens. This is live data. It's not like put your stop 50 pips here. It's not like put your stop below the lowest low. It's not doing that. That's not what it's doing. That's not what it's doing. It's calculating every single day the range between the highest high and lowest low of the pound Swissy, but every day, every 15 minutes. So it's very, very, very sensitive. So in a way, it predicted this low. It's not putting this low because of this. In a way, it predicted that low. So this could have been a buy. This is definitely a buy. But if you were going to buy here and day trade, this is just the first leg, because then you have a higher high, and then this becomes a higher low, but that for tomorrow. So all we know is it rose, and then it fizzled out. If you're a bull, you want to buy down here, then you put your stop here, and you are probably, past performance does not predict future results, but we're looking at past implied volatility. We're calculating implied volatility by looking at each candle over and over and over and how it lines up hourly, 4 hour, and daily. Abdul, if you're interested in that calculation that Lucas did, um, uh, Google Series 34 test prep. And I think even the National Futures Association or the CFTC. So the CFTC governs the whole thing, and then there's this like private group called the National Futures Association who's delegated authority from the CFTC, and they mitigate these professional examinations like the Series 3, the Series 34 through FINRA. Oh my God, it's definitely government crapola, huh? Can you imagine that FINRA, NFA, and CFTC doing all of this crap together? But whatever. And so they do these exams, and I'm sure they even, I would imagine either FINRA or the NFA would give you a study guide so that you can do, and one of the things you'll have to learn is doing the calculations for the crosses. Yeah. Because what Lucas is doing is he's backing me up as he always does, but now he's backing me up with math, not opinion. And he's like, Wayne is right. There is no such thing as Aussie CAD. It doesn't exist. It's an observation and calculation mathematically. You cannot see a black hole. You have to interpolate by extrapolation of other data, like why is the light bending? Oh, there must be a black hole, right? So there is no Aussie CAD. You're observing an Aussie index versus a CAD index, but there's not enough cash flow around the world to really make an Aussie CAD a real currency pair. But everything Aussie CAD, sure. And so when Lucas is sharing the math, You can do the math and go, oh, you can see where the numbers are derived. And then you can go through various pairs and re-derive everything. And then what you're finding is most of these crosses are synthetic. They're mathematically created for your pleasure. Yeah, cool. All right, well, I think that's it. I think that's enough. I think that's good. I think we had a good one. I think that's enough. Did, are you guys happy? Did we do good in Chicago? I am super happy we finally got a YouTube thing to work. It's been a challenge the last two or three travels that I did. Huh? You can. The lighting is tough. There it is. Cool. Yeah, there it is. So, anyways, hello from Chicago. I am not going to be able to meet tomorrow. I have an early meeting, and then I got to get on the jet and get back home in time to do the swing trading group at traders.com. I'd like to invite you to visit and sign up and hang with us at traders.com. The tools are amazing. We have fundamental radars, we have technical radars, we have scalping radars, and we have hours and hours and hours of performance coaching every day. So in my mind, we have the complete package. Yeah, this is everything that you need. Okay. Now you're still going to need a broker. So you'll have to go to tradersway.com, sign yourself up for an ECN. Now there are other ECNs, so do your research. There are not many ECNs. There are not many straight through processors. I think you probably make more money um, luring in idiot young traders that are going to blow up their account. So it probably is a lot more profitable just to simply dark pool everyone and have the blind leading the blind and everyone loses all their money. So I think that probably is more profitable for brokers. Now there are some ethical brokers out there and they use an ECN model, straight through processing, which means their revenue is derived by providing a valuable service, and it's in their best interest that you succeed. And I consider that an ethical business model. So do your research. I mean, dude, do your research. Straight through processing, STP, just like that. You sell, Goldman Sachs might be on the other side of your trade, not another retail trader in a little dark pool. And eventually everybody loses money. You don't want to, you're right. It's like, I think a typical broker is like walking into a casino. You know that 99% of people in that casino are going to lose money. That's what most Forex brokers are like. Everybody is in there, a dark pool, and everyone's going to come out broke. A straight through processor is different. Literally, it's up to you to make intelligent, informed trading and investment decisions. And when you make that decision, you click the button, you're in the interbanking system like everybody else. That is what you want. Casinos are for losers. So, peace on earth. May the pips be with you. May your profits be above average. I hope you have the greatest trading day ever. I will see everybody not tomorrow morning, but if you're any member, by the way, all members of traders.com, we will be gathering tomorrow at 4 p.m. for the swing trading group, and we will plan out all next week. I will probably roll in 15 minutes before. Like, I'm hustling, baby. I'm hustling, and I hustle for you. So thank you for having me on your trading team.